CargoWise Landside is deeply committed to revolutionizing landside logistics. With a complete enterprise system built for modern trucking and container drayage operators that includes proven drayage transportation management, digital rate and quote management, real-time container track and tracing, and on-demand truck, trailer, and container storage. Excellence in container drayage starts with the right software. Enhance transportation management, optimize shipment execution, and improve intermodal business operations with Trinium TMS, Draymaster, GeoStamp Track, and SecureSpace. To learn more, please visit cargowise.com/landside.
Hi, everyone. Welcome to today's episode of TPM Today, the April 11th edition, the 411. We're hopefully going to give you the information that you need today. I'm Eric Johnson. I'm your host almost every episode, except when I'm on vacation or otherwise occupied or sick or whatever. I'm here with you every 2 weeks, the second and fourth Friday of every month, talking to really cool guests about the intersection of technology and logistics. Fairly quiet last couple of weeks since my last show. Not much in the world of global logistics has happened. We'll get to that in a second, I promise. As we all know, a lot has happened. Just wanted to flag a couple things before I get into news of the week and bring my guest on. We're going to have a great discussion. Breakbulk, the Journal of Commerce Breakbulk and Project Cargo conference is 12 days away. It starts next Wednesday evening in New Orleans, and super excited to be there with a bunch of my colleagues and obviously the whole Breakbulk and Project Cargo world. If you haven't registered, there's still plenty of time. There's hotels in New Orleans. There's tons of hotels, and there's still plenty of time to get down there. So would love to see you. I'm leading a couple sessions, one on a focus on the way AI might intersect insert itself into the world of Project and Breakbulk Cargo, and also talking with a trade attorney about the whole tariff situation and its impact on the world of global trade. Obviously, very timely issues, both of them, things I'm probably talking about the most these days. So really excited to be there and talk to that group. Also this week, amongst all the other crazy stuff that's going on, we launched the Inland 25 agenda. So that's live now. We're going to be adding to it week by week, adding new speakers, adding new fireside chats, adding new sessions. So keep checking back. But you might as well register right now, because until May 25th, this is the cheapest you're going to get the tickets until we meet in Chicago in late September. So if you haven't registered already, what are you waiting for? Do it right now. Link to register is in the comments. All right. News of the week. What else am I going to talk about? What else am I going to talk about right now, except the absolute craziness that is going on in the world of tariffs? I just picked a story from earlier this week. We have a bunch of things on joc.com. I think every news outlet in the world has been covering this, every cable news network. So I don't need to go into this in any great detail other than to say it is undeniably shaping the short-term decision-making of most shippers, forwarders, ocean carriers, ports. We are talking about essentially a de facto trade embargo that China and the US have implemented with one another. Tariffs are, I think I've seen calculations as high as 149% on goods, some certain goods from China. If you tally up all of the tariffs from first term, the ones that have been added pre-April 9th, April 2nd, which was last week, and the escalating ones that have happened throughout the last week. We've obviously seen tariff levels go down to 10% for most countries for the next 90 days, pending some potential trade negotiations. But if you look at some of the calculations around the rate as a percentage of all cargo moving is actually higher than it was before that 90-day pause on all countries outside of China. So that just speaks to the importance of the relationship between China and the US. Two biggest economies in the world, two biggest trading economies in the world, stopping essentially doing business with each other for the time being is going to have an impact on everybody. So we'll wait and see. By the time the next show happens, there would have been 34 more developments. So it's really a matter of just keeping up to date on what's going on. With that, I'm hoping the next 20 to 25 minutes is a pause in your normal tariff scheduled programming to talk about something a little bit different. And that's why I'm super excited to bring on Chelsea Zhang, who's a principal at Equal Ventures, a venture capital, early stage venture capital group, which she will go into in a second. Chelsea's based in New York. I'm in DC. It's nice to be in the same time zone with someone. Doesn't always happen on the show. So Chelsea, so glad you could join us today.
Yes, thanks for having me. Really excited to be here.
So before we get into Equal and a bunch of things that I wanted to talk to you about, just give people a little bit of background. Before you joined Equal, when was that? What were you doing up until you joined Equal?
That's right. So I joined Equal almost 5 years ago now, and I actually joined during our last Black Swan event. So I actually joined during the pandemic. I was in the middle of my first year of business school and actually never ended up going back because I love the Equal team so much. But previously, I was in Chicago doing consulting for Fortune 100s across consumer retail. There's a lot of food and beverage and grocery in Chicago. Did a lot of industrials, a lot of supply chain. So essentially the exact same industries I look at now at Equal, but just at a very different stage in their company life cycle.
Got it. So give people a little window into what is Equal. I mean, there's a lot of different venture funds these days. What's Equal? What stage you invest, and sort of what is the industries you focus on?
That's
I'm
right.
presuming supply chain or logistics.
Yes, exactly. So we are a $100 million seed fund. That's fund two for us. And then we are very vertically specific. We look at 4 industries. So I lead all supply chain and commerce investing. We also look at insurance and climate, primarily energy. So what we essentially call legacy industries. We do about 5-ish deals per year, big stage. So generally the first or second round of fundraising for an early and our approach is to get very, very deep in our sectors, which is why, I spend a lot of time talking to great folks like yourselves within the industries that we invest in. And it's obviously an incredibly timely, discussion for us to be having within supply chain and commerce right now, given a lot of, the macro dynamics we're seeing.
Yeah. I mean, I think I was sort of joking that this can be like a little bit of a respite from everything that's going on tariff-wise, but obviously you're in a financial asset class. What's going on in macro obviously has a big impact on you. So we can get into that, but I did want to get into stripping out what's gone on in the last few months. There are some other interesting kind of macro things as it relates to freight transportation that have been going on for multiple years now. Can you kind of characterize how interesting, how attractive is freight transportation as a industry to invest in? Like maybe say relative to when you started, or even if you're looking historically.
Yes. Great question. I think it's a complicated answer. So I joined venture in, beginning 2020. Right before the pandemic.
Right in the thick of it. Yeah.
Right in the thick of it. And freight transportation, supply chain, logistics specifically, I would say within broader supply chain, logistics specifically became very, very sexy from a VC perspective. Yeah. And I would say that was probably the first time that you saw so much capital flow into this segment of the industry from the VC asset class. And then, there are a lot of interesting things that were invested in. A lot of generalist money flew into the space. And I would say vast majority of those haven't panned out to date. I think for a variety of reasons. Like primarily, I think there was just a very big delta between multiple expectations on what these businesses ultimately could be and what generalist VCs were used to, which were more software multiples. So I think we're seeing, shall we call it another bubble this year, right? With a lot of the AI application stuff, because I think at a high level, it seems to totally make sense, right? Massive TAM industries, very legacy processes. Seems like AI workflows, AI agents, AI-enabled data networks, like a lot of these like themes that VCs love would be a very interesting application into the industry.
Yep.
I think you couple that with the additional angle of now like tech-enabled services are also quite sexy again from a VC perspective. So when you couple those two trends, I definitely think you're seeing a lot of renewed interest in this category from VCs. I will say like TBD on how this wave turns out, but I do think we are actually like, at the top of generalist interest in VC in supply chain again.
So is that, I remember reporting middle of last year, I think it was McKinsey put out a chart that showed sort of the nosedive of venture investment globally into logistics. And from like mid 22 through middle of last year. Is that renewed interest? Is it purely because there's this sort of window into, AI agentic stuff is like the perfect solution to solve some of these things, and we know the industry better now than we did 10, 12 years ago? Or is it we weren't investing a lot in for 2 years, and now we have capital, we've raised funds, it needs to go somewhere, and this looks like a better bet to go somewhere than maybe the models we invested in previously?
Yeah, I think that's a good question. I would say it's probably more 1 and 3. I'm not sure if people know the industry more than they did.
The associates that do the due diligence keep changing.
That's right, exactly. Like just like the junior turn is like,
Yeah.
it's quite high, right, in the industry. And I will say from like an absolute dollar perspective, if this wave continues, I think we'll see the absolute dollar trend in like, a year from now, a year and a half from now, right? Because usually with those types of trend dollars, it's very later stage focus, right? Just because like one massive later stage round can really bump up the trend lines there.
Right.
What we are seeing anecdotally, at least at the seed and pre-seed, is I think really good examples like tech-enabled BPOs, right? You're actually seeing like a couple of very notable teams raise huge rounds at the seed or pre-seed for tech-enabled BPOs, and seems like that those teams will continue to be able to raise a lot of money. Now, I think the question you're kind of asking is, have folks learned or remember, the consequence of applying tech multiples to companies that may not deserve software multiples? We shall see. Like, I do think there is a intellectual argument to be made that like, okay, well, like AI can make services businesses more profitable. Like, I believe that is academically possible. I don't know that changes the actual multiples that a public investor is going to give to that business, but they could be looking at a different type of ultimate exit value if the profitability if the P&L does look different. But I think those are all like very early in what we think is possible with AI.
So I want to come back to AI because obviously that's a huge part of the story right now. But I wanted to ask, so we obviously had a very high profile demise of Convoy. What was that, like 18 months ago, something like that. We've also seen a couple other companies that raised a lot of money, whether it's tech-enabled 3PLs or visibility providers, raise at super high valuations, like really like moonshot type valuations. Are there, from the investor side of things, and I realize I'm asking you to speak for like a whole bunch of people who you don't necessarily represent, right? And you have different, you have a different like set of math than that Andreessen does or something, right? But in aggregate, do you think there's an appreciation for why those things didn't work out, even if they were good models and good companies?
I do think so. I do think I do think that part of, and I will say, I think there were like very intelligent and smart investors who had invested in those businesses, right? Like, I don't think everyone around the table was delusional to the fact that, like,
Right.
there was somewhat of a disconnect between what a traditional broker would be versus, the multiple that they were giving a convoy.
Yeah.
I do think actually part of it's a feature of venture and not a bug, but it's a feature of venture is that you have folks who can believe that things can be different. Now, that is like that's a very general statement, right? That's like very different than actually going into the meat and potatoes of what like a business model could be.
Yeah.
But I do think that part of investing in something in a very, very legacy industry is that like some part of you still has to believe that there's possibility of change, right? Of like the existing economic structure. Now, for us specifically, I think because we only do 5 deals per year, we're not a high volume shop. I think we just have to be much more strategic about how we play the earlier stage investing, especially because now you do see like a lot of awesome, very compelling teams coming in, launching a product very quickly, able to get a lot of customers very quickly because the surface area for our industry is incredibly massive. It's huge. So I do think there's also different strategies, and like certain firms actually might be way better positioned because of their existing structure to pick a winner, right? Or to actually enable a winner. And that is a very different strategy than where what might have been successful, 3 years ago, 4 years ago, 5 years ago. Yeah. But I do think like, if we believe wave of AI is a new wave of technology innovation, then the way that investors should be investing should change as well, right? Like we should also be adapting to the times.
Well, and there's so many different angles to this, right? And so much of it is honestly psychological. I think we're obviously realizing a lot of like the financial market is very psychological and not necessarily like fundamentals.
Unfortunately, yes.
Right? I mean, we've seen that over the past week and a half. Where was I going with this? Oh, the market, like how do you sort of think about something where, and I know you're early, right? Like you're not placing $1 billion bet on a company that's had good growth, but you're only doing 5 deals. So you're doing the research to make sure that you're putting yourself in a position to back a company that eventually will get that type of growth round, right? Like sizable growth round, right? Right? So you have to project that someone else will find what you've invested in super interesting. How do you just described kind of like the investor side of things. How do you account as an investor for like the buzzsaw of the market, which is the market has these entrenched characteristics that haven't really changed all that much through now 12, 13 years of VC being involved in it. And they're obviously super exposed to the swings of the market itself. So interest for something is less when the market's down, or conversely, it may be higher when the market's down, right? So how do you, because I've said this on the show a million times, and I'll say it again right now, like never underestimate this industry's ability to turn their back on a good idea, right? Like, so how do you account for that as someone who needs to like?
Yeah. This is a really, really good question. And I think for us, it depends on the capital efficiency of the thing that we're investing in and the quality of the team itself. And I would say the quality of the team is obviously multiple fold, right? It's like a lot of it is like, one, does this team have some unfair advantage, right, in the industry? Can they call up 10 enterprise customers day 0 and like get a bunch of pilots going?
Right.
Is this a team that can raise a lot of money if they need to, right? There are some things I do think like traction is always going to be lagging, potentially money in the first couple years. Like there are models like that. So I think for us, because it's like, again, we don't do that many deals. We really try to do it on a case by case perspective and like discuss like, okay, how much money do we actually think this specific idea and this specific team is going to need for them to get to escape velocity for, an outcome that is meaningful for the fund. And I think a lot of things within supply chain, you actually don't need as much capital as in, I think you kind of allude to this a little bit. We are in an industry that, depending on who you're selling to, there may be a cap to the number of customers you can just actually add in a year, right? There are some things that just take longer for the industry to buy. Now, there's other things that can scale very, very quickly, right? And I think that's why a lot of people, were drawn to the broker model, right? Is because the speed of growth is one that venture investors like, right? Versus there's some other things where if you're just selling into massive shippers, the growth may look a little bit different. But I think for us, being very realistic and honest with ourselves on how fast can something actually scale and how much capital do you actually need, that really helps us figure out, okay, is the right team for the space, right? Because I think some things require a different quality of team or a different type of team versus there are other things where it actually might be okay for more of an outsider to come in, right? So, and I think actually you see this in the agentic world right now a ton. You have a lot more outsiders coming in that I would say, for whatever it's worth, I hear a lot of supply chain investors who actually understand the space very well be much more open or excited about that type of founder than they might have been 3 or 5 years ago, right?
Okay,
interesting. There is a additional benefit to the velocity of product adoption, right? Yeah. The product iteration, I think it is the ability to move much quicker. It is 100%. It was always an advantage, but I think it's even more important now. Yeah. Now, I think there is a separate discussion to be had on the quality of customers that some of these, early winners have. And I would say I'm generally of the belief that it's great if all your first, 3 customers, 5 customers, 10 customers are other VC-backed companies, because there are a lot of other VC-backed companies in the space. But I generally love to see a non-VC backed buyer, because that is a different type of buyer. And that is the vast majority of the actual buyers in the industry, right? I think the early adopters are obviously very important, right? It's better to have them versus not, and they're a good early signal. But there's a different type of signal when you have businesses that don't even know what VC is buying your product, right? That's a different type of product validation.
So, okay, a couple of things I wanted to get to that we talked about when we caught up a few weeks ago, and one is related to this agentic. So let's touch on that quickly. So I think you made the statement, something to the effect of from your position, it's really hard to know which company in a 1,000-horse race is actually going to be the one that wins out, and because it's not really necessarily quality of product. It's not even necessarily quality of distribution. It's sort of the whims of the market sometimes just to take things where they go. Mm-hmm. How are you thinking about the best application of all of these agentic kind of software providers that have come up, whether it's voice agents or workflow agents or, a million other things?
For sure. I think it's really 2 things. I think team aside, it's really 2 things that would get us really excited. Is one, do you have some sort of data mode that gets that gets better over time, right? I think if you have some proprietary data, that's always going to be, I think, incredibly valuable, right? Yeah. And you see this, I think Genlogs is a good example of this, right? When we talk to folks in the space, I know they're still building out the full network, but people are very excited about the potential of that data, right? Because it's something they've never seen before, and there's a lot of different applications for it, from fraud to compliance to commercial, right? That is a very interesting potential unique data, and I think that's why that company has done well, and it's seen as one of the earlier leaders in the space. And then the second thing is just can you get embedded in the workflows, right? And I think that is a very important thing that we're looking at right now, is how easy it is for you to get ripped out, right? And I do think even some of the ones that are a little bit, there are a lot of solutions that are easy to adopt, easy to rip out. And I still think that there will be winners with those types of models, but that last model is not just something that we could invest in. I think that's like probably going to be a better later stage bet, right? Or like for a fund that's much bigger than ours. So for us, we are really focused on things that have unique data potential and or is going to be like a true embedded workflow product. And I think like we are seeing some really interesting teams work on both. And I think they probably require teams with different strength, but we think both generally those are like kind of the two things that we're looking at right now.
So yeah, I think the most interesting conversations I have right now are with brokers who are testing a bunch of these different tools, because they, if they trust me, they will have a very honest discussion about like what is good for what, how they're complementary, or whether it's, it's like they're just testing survival of the fittest,
right?
Within, So, and we could have talked for 30 minutes just about that topic.
But actually, there's like anecdote that I thought was super interesting. I heard last week. I was also talking to someone who is like deep in the freight dispatching space, and they were basically telling me that brokers can already tell when it's an AI agent on the other side,
for sure.
And they just hang up, right? Because like a broker is like they can just call up a bunch of carrier, but if you're one truck shop, you have to talk to the AI, right? Because you're like, I need this load. So it is interesting that you're already seeing AI actually perpetuate existing industry dynamics, right? It's not necessarily changing right? It just actually makes I'm sure it's making some brokers much more efficient. And I actually think like now the middleman is like incredibly well positioned in this industry, because now you can play all these AI tools off each other. I'm sure pricing is just going to go down, which is great for you. So it is interesting that it has been very quick to like see some of these tools being adopted. But that's a separate question of like, okay, should an investor actually invest in some of these products? Yeah.
Right. All right. We're rapidly running out of time, unfortunately. So let me get to this question. We've talked about this.
Yeah.
It's my contention we've not seen a benchmark exit in global domestic logistics that would actually set the bar for folks like you to like appropriately measure, right? What a outstanding outcome would be.
I have one.
Okay.
Samsara is a great outcome. And I was like, okay, I think this is the one that does fit. I mean, that's not great, right? That was not the only one that I could come up with. I think the other one, Freightos is public, but they like it was like a SPAC, and actually,
it's a little not messy, not like the business.
Right. It wasn't perfect.
It's not a clear like IPO in the way.
That's right. And it's like 80% down from like the initial price. Right. I did think the Lineage case study was quite interesting. It's not perfectly VC backed. I think it was like maybe early PE growth equity, but it is a company that's grown really quickly.
Oh yeah.
Then when they went public, I think you and I talked about this. They talked about like software like a bajillion times in the S1. But since the IPO, I think they were actually targeting 30. They're now at like 10-ish, I think that's the number. 11.9, that's the market cap today. So actually their multiples put them in the same, they're getting traded at the same, essentially the same level as like an Americold, which is like the legacy competitor. Right. So I think it is a good example of like, it's still a great company. Like I think they've like executed.
Oh, it's totally, there's two different issues. Is the company good? Does the public market
give it the multiple?
Yeah, value it correctly. That's a totally different issue.
That's right. So
yeah.
So I think we'll see. I mean, I think it is like, I think we always come back to this is if this company works, and we're being very realistic about like true multiple you can get in the public markets, I still think there are a ton of businesses that can be like big, but it is making sure that you have someone in charge who understands that and not raise at a rate that is ultimately not commensurate with potentials. Yeah.
Last question. Every guest gets this. Who's your favorite band or musician? And you have to say why.
This is such a good question. My favorite musician right now is Maggie Rogers, and I just like her vibe. I love her vibe.
Okay. Any particular? I'm not familiar with her. Any particular song or album that we should be?
I really loved her like first album that hit it really big. There's like a very famous video of her when she was like in college, and Pharrell was listening to her like a song that she made in college, and
Okay.
I think Pharrell was like no notes, perfect. So she's like a musical prodigy, but check her out. Her
All
latest
right.
album's also pretty good, but the first album is like the one that hit it big for her.
Cool. I will check her out, and everybody else should too. James, thanks for chiming in with some comments. Really appreciate it. Thanks for joining. What's the best place for people to reach you?
Chelsea at equal.bc. Feel free to email me. I love, cold email. So, LinkedIn as well, Twitter as well, wherever. I'm always open to cold outreach.
Cool. Thank you so much. This has been long overdue. I'm so glad to finally have you on the show. Thank you so much for giving us a really cool lay of the land.
Yeah.
We'll talk soon. All right. A little bit overtime. Sorry. There's just too much to talk about these days. All right. Dad joke of the week. What are the strongest days? I feel like I may have told this joke before. What are the strongest days? Saturday and Sunday. The rest are weekdays. That is a real good dad joke. And if I actually told that one before and I told it again, there's no more dad joke than like repeating the same dad joke and forgetting that you've told it. That's like the apex of dad jokes. Thank you to Chelsea. Thank you to the Let's Talk Supply Chain team, the best in the business. Nicole, the world's greatest show producer. Thank you to CargoWise Landside for sponsoring the show as always. But most of all, thank you to all of you for tuning in every episode. Really excited for my next episode in 2 weeks. I'll be on site at the Breakbolt conference doing my next episode from New Orleans. Not with a hurricane in my hand, I promise. It's too early in the morning. But thank you, everyone, and I'll see you in a couple weeks. Be careful out there. It's crazy.